excuse me, lead equity analyst Hargreaves Lansdowne. Excuse me, I'm gasping. It's the hot brown water. It's killing me. Sophie, I look at the equity markets, and everyone's flabbergasted at how resilient they've been. Let's start with that. Why is there a bid to global equities as a general statement?
Yeah, this is the big one because I'm absolutely someone who's in the camp who I'm a little bit of a bear here. I think that
I should be sitting over with Lisa, but continue.
I've still got my jacket on as well. Is that okay?
It's okay. I've got a jacket on.
All right,
There's no rules here, Sophie. Just make it up as you
That's not the vibe that I'm getting. I feel like there are some rules. But jackets aside, in terms of what we're seeing, there is a great deal of optimism, and I think that's kind of what you're alluding to here. And I think that unfortunately that isn't going anywhere. What we're seeing is consumers in particular. They aren't behaving like there is a recession in any form coming around the corner, particularly when we look at the UK, Europe as well to a certain degree. There's a great deal of resilience still in the consumer, and everybody's just very excited. I think there's also a great deal of this notion that central banks are going to be sticking to the script and that interest rates are going to be doing exactly what everybody predicts it to be happening. And unfortunately, as we know, that's not necessarily going to be how this plays out. So I do think there's potentially some overexcitement in the markets.
What does it mean to be a bear in equity land as bears have gotten beaten up all year long again and again and are now throwing in the towel?
Are we throwing in the towel? I mean, I'm on the cusp. I think for me, what I want to really kind of just shout about, and I think is getting forgotten here, and I know it's boring and it's not what people want to hear, but let's not forget fundamentals. There are so many people out there, they are talking about incredible thematics and mega trends, but fundamentals to me are where people need to be landing as well. I'm talking about looking at consumer staples, non-discretionary spend. Where is that being funneled in the next few months in particular? I don't want to bring it up, but we are heading into the festive trading season. This is going to tell us so much about where strength lies as well. So for me, it's please remember about your fundamentals, because I think they're getting left by the wayside.
Speaking of fundamentals and pairing it with this idea of the latest tech thing, there was a huge boost to European markets with the idea of a weight loss drug and what it did to Novo Nordisk and the whole question around Ozempic. And suddenly people were talking about how this is going to rejigger the European markets because suddenly this is going to be the preeminent type of trade. We were talking yesterday about some of the side effects increasingly of this. How do you get ahead of fads that are perhaps bigger in name than they are in reality?
Precisely. It comes back, first of all, to fundamentals. So when we look at big pharma, for example, we know for a fact that you're looking at hundreds of millions of dollars of falling off that patent cliff in the next decade or so. And obesity treatment is a really exciting mega trend. It's something that is going to generate a great deal of money. It's I think a really good place to be. But in terms of getting ahead of that trend and making sure it's not just a fad, you need to also look at what else these companies have on their books. What does R&D look like? What is the pipeline? Because if their pipeline is only this, that's problematic to me. What else do they have that can back this up? But as a mega trend, I do actually think obesity treatment and the drugs there, a lot of that excitement, takes a lot for me to say this, a lot of that excitement is warranted, but it's not enough on its own.
Sophie, how investable are car makers right now?
So I think there's a lot of strength in the sector still. Do I think it's going to be bumpy? Yes, I do. But I think there is some strength there, not everywhere. This is not a sector that is created equal, and the divides here are becoming much, much larger. And I think so much of it, perhaps unsurprisingly, is going to come down to this pricing pressure as well.
So 20% plus makes US autos, GM, Ford, Stellantis uninvestable for you?
It's borderline. I think for me, a lot of that, the problems and the risk probably does outweigh for me. A lot of the excitement is probably where I'm at. But when we look at some of the maybe more exciting names in the sector, I think there are still quite a lot of opportunity. But also this industrial action that we're seeing as well has a lot of read across as well for broader equity inputs as well. So people that are supplying car parts, those areas of the market too. These are really quite vulnerable right now.
Help us with your savings and resilience index. It's acclaimed. Bring that to the UK, but also over to the United States. It sounds so, talking points of consultants. Tell me about our savings and our resilience. given what we're going through?
Yeah, so here in the UK in particular, you mean kind of the savings rates that we came into the pandemic with. So the UK in particular, we had a far higher savings rate than a lot of our peers in particular, and this means that it's kind of feeding into our inflation problem in a really big way here, because we're only just starting to chip away at that. Whereas over in the US, those that kind of resilience and those savings levels have already been depleted. So that's also kind of feeding into things and pulling things down in the trajectory that you would hope for, and that is not playing across in the UK right now.
Sophie, this was great. Sophie Lunier there of Hargreaves Lansdowne. Thank you. Thank you very much. Did you see no business attire on the Senate floor? Did you see that new one?
No, I missed it.
They've got rid of the rules. You can wear what you like.
Really?
Yeah, on the Senate floor.
Let me guess. You have thoughts?
I have strong thoughts.
Yes.
I'm sure you have
I'm
strong
shocked.
thoughts too.
They're right.
What?
If you're leading a country, if you're representing the people, shouldn't you dress for it?
So in other words, no sneakers, or I should say no trainers.
Those hybrid things the senators have started to wear anyway with suits.
What if they've got bad feet? I mean, 1 in 5 are over 70.
What did you have to do at school? You got a doctor's note if you had bad feet and had to wear sneakers. That's what I did at school.
So you think that they've got to get a doctor's note if they want to wear the
I had a
hybrids?
doctor's note if you want to wear the
That's
hybrids. You're
fantastic.
representing the people, the country. If school kids have to do it, why shouldn't they?
So you think they should have a uniform?
They should wear a business suit if they're a male, yeah, without a doubt.
All right.
Business attire is the right way to go. For sure. Don't you agree with this? I'm surprised you're silent on this. They're going to go to the Senate floor in the
opposite camp than you.
hoodie and
I
shorts.
think decorum
Go ahead.
has slipped, to say the least.
There is also a sense of respect, but there's also a sense of service. And this goes back to a discussion of, are you serving a nation, or are you trying to be an Instagram
My
star?
mother got dressed up to go to the grocery store, and she wore white gloves to go to the department store.
There you go, TK. Well said. It's like Trudeau in those light
Well
grey
said, okay,
suits.
well said.
G7, eh?
You have such issues with those light gray suits. I just think that
Trudeau's got a lot of problems right now. The light grey suit is also one of them. Just, just to
He's
throw
got
that
great
in
hair.
there. He does. Something
So
I
it's
don't
all
have.
fine.
If you are just joining the program, welcome to the program. The S&P 500 negative here by 0.16%.
Now the latest news from New York City and around the world. Here's Michael Barr.
Thank you very much, Tom. Lisa, John Hunter Biden sued the IRS, alleging that so-called IRS whistleblowers illegally disclosed information about his taxes. President Joe Biden's son, who was indicted last week on firearms charges after a plea agreement with the federal prosecutors collapsed, filed the suit today in federal court in Washington. It's day 4 of the auto workers' strike in Detroit, where the union and car executives remain far apart. Stellantis offered to raise pay 21%, which was rejected by the UAW head, Sean Fain.
It's been decades of falling behind, and especially this past decade, in the most wealthiest times in the history of these companies. There is no excuse. These companies have made $250 billion in the last 10 years, $21 billion in the last 6 months alone, and our workers' wages and conditions have went backwards.
UAW President Sean Fain spoke on CBS's Face the Nation, heard Sundays on Bloomberg Radio. Live from the Bloomberg Interactive Broker Studios, this is Global News, 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries.
The greatest minds in global credit meet at Bloomberg's London headquarters, and the surveillance team will be front and center. This is Tom Keene. Join Jonathan Farrow, Lisa Abramowitz, and me Thursday for a special edition of Bloomberg Surveillance with Apollo Asset Management's Jim Zelter on the risks, the opportunities forward, in depth.
Bloomberg Surveillance, live from the Global Credit Forum in London. Thursday morning at 10 on Bloomberg 99.1. Bloomberg, context changes everything.
Access a vast selection of global fixed income securities at Interactive Brokers Bond Marketplace. Search their deep availability of over 1 million bonds globally. IBKR has no markups or built-in spreads and low, fully transparent commissions on bonds. IBKR displays the highest bids and lowest offers received from the electronic venues they access. In addition, clients can interact with each other by placing bids and offers online to execute their trades. Learn more at ibkr.com/bonds.
No one just watches a movie anymore. They play the video game, stream the soundtrack, and binge the companion podcast. boundaries between Hollywood and Silicon Valley have blurred, and everyone is scrambling for one thing: screen time. Join me, Lucas Shaw, for Bloomberg Screen Time, our new LA event that will connect entertainment's brightest minds with guests like Ted Sarandos of Netflix, Insecure creator Issa Rae, and podcast king Bill Simmons. Catch it on October 11th and 12th, and find out more at bloomberglive.com/screentime.
Now your 3-day weather forecast on Bloomberg 99.1.
Perhaps a shower this morning, then it turns partly sunny in the district of Baltimore later today. Temperatures will climb to 75 to 80. High pressure will result in clear skies overnight, lows 55 to 60. The high will produce abundant sunshine tomorrow. Highs be 75 to 80. Clear 55 to 60 tomorrow night. Sunshine Wednesday with temperatures around 80 degrees. I'm Rob Carolyn with your 3-day forecast on Bloomberg 99.1.
An average of 92 does allow oil prices to go to 100. We're putting out a piece later today which is calling for $100 by Halloween for Brent. And again, this is just a trajectory. And at this point, of course, it's a short-term thing, right? I'm not saying it's going to average above 100, but could it go to $100 for a bit? Absolutely, yes.
Absolutely yes. Triple-digit crude by Halloween is the call from Amrita Sen, the co-founder and head of research at Energy Aspects. Crude right now on WTI, 91.37. On Brent, getting closer and closer to 95, 94.50 currently. Outside of that, in the equity market, futures just about unchanged, negative 0.1%, rolling over in the last hour or so. In the bond market, going nowhere, 433.65. Talked lots about that record run, that weekly streak of dollar strength, 9 weeks of it against the weaker euro, 106.66. Positive this morning on that currency pair by 0.08%. The story for the three of us all week potentially, and maybe for longer, the strikes from UAW against Detroit's big three, not one, not two, but all three major manufacturers over in Detroit. And TK, the ask, 40%, 36%. What they've been offered at the moment is 21% over at Stellantis, and the pushback was pretty swift. That wasn't entertained really in any way.
In a quarter-mile traffic light camera ahead.
It's front and center, and that's what gets the media's attention, but I'm looking at all the other attributes as well, and particularly the ability of the union to capture present and future electric vehicle jobs. I'm not hearing enough about that.
How do these guys compete with China?
How do they compete with BMW in the Carolinas, or 3 plants by Atlanta? That's what I don't see.
How do they compete with Tesla?
Well,
that's what Dan Wedbush said. Oh, look, I get it. Tesla bull, I understand. If you were bullish before, you're bullish now. But surely, you're looking at this play out. Union versus non-union. It's a pretty clear investment thesis there, isn't there, Lisa?
Which is the reason why some people think that the reason why you're seeing this playbook from the UAW is to try to capture some of the workers from Tesla, to say we actually can make inroads at a time of technological change. They're throwing it all out there because a lot of people view this as the last opportunity that they have to do this. And if they don't get those workers, you're right, it's game over.
Yeah, we're going to have to see here. Right now we're going to get a briefing, and we have been so advantaged by our Detroit shop, I should say. He is our Detroit bureau chief. David Welch joins us on the worry of industrial decline. David, you and I lived it on the New York Thruway. It was Carrier in Syracuse. It used to be a huge operation for Syracuse, New York, and then there was manufacturing decline and the Eastern Rust Belt. Is there worry here about manufacturing decline in Greater Detroit?
No, there's always a bit of a what me worry sort of thing when it comes to that. By the way, it wasn't just Carrier, it was GE and Miller Brewing, a whole bunch of factors, so there's nothing left up there. But look, there is concern about being competitive with Tesla, with being competitive with Japanese, Korean factories. At the end of the day, though, for automaking labor is, it's well under 10% of costs comes from the labor, and if you boost wages up by 5% a year, it's not like suddenly every vehicle loses money. It cuts into what have been record profits, but it's not something that devastates them. They are at a competitive disadvantage from labor costs. They already are, and they will more so. And look, now the union's going to make a big stink about this. And they've been saying that they need to organize Tesla and organize Toyota plants. They've never been any good at it. They just routinely failed. They've never failed to disappoint when it comes to that. And so if they get a good contract, they've got to be able to say, go back 4 years and say, look, we did organize these other plants and we're driving the wages up.
Have you been surprised or understanding or interested in how the executives of the three auto companies have reacted?
Look, actually I have. They've voiced frustration. You can see that from Farley. Farley's a pretty open guy, pretty colorful guy when he speaks. Mary Barr is always composed. You guys have interviewed her. She's always on message. For her to come out and say she's frustrated with the union really says that they're having a tough time with Sean Fain and a tough time getting what they think is a fair deal. And in the story we have out today, Bill Ford said to the bargaining committee, he said, I can look you in the eye and I can say, I believe this is a fair deal. And I don't think he's wrong. It was a pretty good deal that they've got. But the union's they're gonna run it to the brink and try to get more.
What are they after, David? You and I talked about this a number of weeks ago, and I said, what do you think gets it done? And you said something like 20%. And at the time, I thought, yeah, 20% sounds about right. That's the offer right now. Ford 20, GM 20, Stellantis 21. What do you think gets it done now?
It's tough to say. I don't think it's a lot higher than this, and clearly you and I were wrong on that before. But the tenor of things did change over the weekend. The union, reporting coming out of the union saying that they made progress with Ford over the weekend, kind of a more neutral to positive view of meeting with General Motors, and they're reconvening with Ford and Stellantis today. So it went from heated, nasty rhetoric about greedy billionaires and awful CEO salaries to we're making some progress. To me, the big thing isn't really going to be wages, because first off, I think 21% would get it ratified with the membership. But does the union really stick to its guns on pensions, or was that kind of a throwaway demand in order to get leverage for better raises and cost of living allowance? Companies will take a very long company-wide strike before they give in the pensions, period.
Unionization has fallen really dramatically. I was looking at one figure. It's about 6% of the population, of the working population in the United States, from much more just a little bit ago. More membership, increase the actual participation in areas like electric vehicle making?
I think he will have success some of the battery and electric vehicle plants simply because of the relationship with Detroit State Automakers. They've already organized the Ultium plant in Ohio, of course, that's driven by